They've got no alternative but to support the markets. Otherwise, the whole system falls over. Then they are committed to destroying the purchasing power of their currencies. It's actually as simple as that.
Alasdair Macleod discusses how central banks must decide whether to defend the markets or the currency. His prediction is that the currency will be the sacrifice. The recent rescue of Republic Bank by major banks and the Fed is an example of the hidden cost that most people do not perceive until it is too late.
You've told us about this for years, and certainly in the last quarters, is that there's going to have to be a decision made by the Fed and by other central banks whether to defend the markets or whether to defend the currency. And you predicted that most likely the currency will be the thing to be sacrificed to keep, because it's a hidden cost to most people. They don't quite perceive that until it's too late. We've even seen now another bank, a regional bank, Republic Bank in the US, was on the ropes terribly over the last week or so. And then you have this conglomeration of major banks swooping in together with the Fed. We got JP Morgan, Chase, Citigroup, Bank of America, Wells Fargo, Goldman Sachs, and Morgan Stanley, all involved in the rescue. Jamie Dimon and Janet Yellen talking about it, and even Jerome Powell and so on, all talking about this package that's going to help. And now that stock looks like it's recovering and people are getting their feathers smoothed over, this kind of unprecedented emergency action.
Alasdair Macleod responds to Janet Yellen's claim that the banking system is sound by stating that it is unsound. He explains that the system is at risk due to the end of an interest rate-driven bubble, where monetary policy has caused interest rates to decrease.
All the while, Janet Yellen saying the banking system is sound. Can you talk to us about, just to the ordinary person trying to use common sense, it doesn't look like the banking system is sound if you have the heads of all the major banks and the Treasury and the Fed having to have emergency meetings every weekend to rescue another one.
Yeah, no, you're right. It's definitely unsound. It's as simple as that. What we have is the end of an interest rate-driven bubble. Interest rates being driven lower and lower by monetary policy. That has stopped, and the bubble has burst, and the whole system is now at risk. It really is no more complicated than that. And we're seeing this, as you rightly said, with the Republic Bank. What's interesting is that in earlier times, I would have thought that the Fed would probably talk to the large commercial banks, and the large commercial banks would come away from the meeting with the Fed saying to each other, my goodness, we must be in trouble if that's what the Fed's saying. But here they've actually got together in order to try and disrupt one regional bank. It does tell me that the senior bankers in the US G-SIBs, which is really, we're going back to the G-SIBs, are actually themselves very worried about the whole system potentially falling over. I don't see that getting together and lending $50 billion to an ailing bank is the end of the problem at all. And I'm sure they don't. But I think what they're doing is that they realize that the problem really is that its bank credit depends for its value on confidence. Confidence in the institution, which is a counterparty. So if you've got a deposit, say, with JP Morgan, it's confidence in JP Morgan. And it's also confidence in our fiat currency world that JP Morgan's deposit credibility is actually tied to another form of credit, which is the credit of the Fed. And so you can see that you don't want too many questions asked. Well, how should I value this credit? Do you see what I mean? And the problem with the banking crisis is that it gets everybody asking just that question. Is my money safe in an XYZ bank? It's not your money to begin with. You have a credit. The bank, if you like, is in your debt. That's what it is.
Alasdair Macleod discusses the dynamics behind the current banking crisis and how it is considerably greater and more destabilizing than the Lehman crisis. He also mentions the possibility of some banks falling first, which could topple the whole banking system.
What we're looking at is not a banking crisis which just happens one event, everybody falls over, and we've all lost our money. No, it tends to be, you tend to get problems developing, and it'll get to a pitch a little later on from which we either recover or we don't. The Lehman crisis was extremely severe. The dynamics behind this one are considerably greater and considerably more destabilizing potentially.
That's what I was going to ask you, and you've already gone there, which is people have been holding their breath for some time now, looking at perhaps Deutsche Bank or Credit Suisse, or wondering, some banks in Japan, which are going to fall first, and will that be the moment that just topples the whole house of cards? Your assessment is that's not typically how it plays out. There are tremors before the big earthquake.
Yeah, rather like an earthquake, exactly. You might get a little bit of a sort of warning first, but you've just got to look at the banking system. We have not only GSIBs, but if you look at GSIBs, which is really where the systemic risk, the global systemic risk resides, you can sort out your own patch, your own regional banks and all the rest of it. And then something suddenly from abroad just hits you. Just knocks the whole thing for sich. This is why these global systemically important banks are important. This is why, in the wake of the G20 meeting in 2008, which was an emergency meeting following the Lehman crisis, it was agreed there that the Bank of International Settlements, which hosts the Basel Committee, would put in measures to strengthen the banking system and reduce the risk of global counterparty failures. And Basel III came out of that. That's not yet fully implemented. Parts of it are, but it's not yet all there. And we're 2008, and we're now 2023. It's taken a long time. In a credit default swaps, it's just the interest that changes hands. You know, what you're doing is you're exchanging a fixed rate for a floating rate, or a floating rate for a fixed rate.
Alasdair Macleod highlights what is at stake in the current banking crisis, which is why the authorities cannot allow the banking system to fail. He also emphasizes the commitment to destroying the purchasing power of currencies if the market is not supported, leading to the whole system falling over.
If one GSIB is allowed to fail, and this is the point behind Credit Suisse, the counterparty risks from all this begin to undermine all the others. And this is a very important point. So that is what's at stake. That is why the authorities cannot allow the banking system to fail. It cannot allow bond yields to rise significantly from here. They've already fallen from where they were last September. So you could, from that point of view, say that the situation has been diffused a little bit since then. But what they will do, in other words, having taken that choice that they've got no alternative but to support the markets, otherwise the whole system falls over, then they are committed to destroying the purchasing power of their currencies. It's actually as simple as that.
As we come to the end of this video, I hope you found it informative and thought-provoking. If you have any thoughts or questions about the topics discussed in this video, please leave a comment below. Don't forget to like and subscribe to stay up to date with our latest content. See you in the next one.